Good morning, everyone, and welcome to the technical analysis using Nadex indicators A to Z Part 1. My name is Gail Mercer, and I am going to be your hostess today. Now, before we get started, I would like everyone to take a moment to read over the Nadex risk disclaimer. This is for your protection as well as ours. And then basically, you should never trade with money you cannot afford to lose. All trading, whether it's a binary option or a spread or even the touch brackets, they do involve risk. So make sure that you can tolerate the risk before you enter the trade. Now, for those of you that do not know me, again, my name is Gail Mercer, and I'm the founder of TradersHelp.com. I have 15 years of trading experience. I actually started out with a company that programmed indicators for different platforms. When I first saw the price bar on a chart, I fell in love. I just thought it was absolutely the most amazing thing I'd ever seen to know that we could actually see the value of anything on the live edge of the market. I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor to Stocks and Commodities Magazine, Traders World, and Top Shelf. I've also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of 4 books on trading Nadex binary options, including ones that teach you how to read candlesticks, how to trade currencies, keeping it simple strategies, and the New Trader's Guide to Trading Nadex Binary Options in Spreads. Now, today, we're going to talk about what are technical analysis indicators, the different types of technical analysis indicators, the Nadex indicators A to Z, and finding an indicator that works for you. Now, what are technical analysis indicators? Basically, it's a mathematical representation of historical price action based on different components. Those components can be price highs, price lows, the opening of a price bar, the closing of a price bar. It could be based on volume, or it could even be based on midpoints, or any combination of these elements. For example, the Chaikin is based on the high, low, and close of a price bar. Okay, so we just combine them to give us this mathematical representation. Okay. Now, there are different types of technical analysis indicators. You've got moving averages, you have oscillators, you have channels, you have momentum, you have trend indicators. You know, there's just a whole series, and some of them will be, fit into more than one category. For example, a moving average is simply one or more lines that average different price points. So you could have a moving average, and some people would also consider that a trend indicator. Okay, you could combine moving averages. There's one way where you do 5 different moving averages on your chart. Again, it's all based on a moving average. You've just combined it into a trend technique. Okay, now oscillators are used a couple of different ways. You can identify cycles. In other words, you can actually identify, okay, typically between one high to the next high might be 3 days. That would be a cycle, okay? And you can use that for timing. But oscillators can also be used to identify overbought conditions, oversold conditions, or even divergence. Then you'll have channels. Channels usually consist of a midpoint line and then a high channel line and a low channel line. Now, the channels, there's different ways to produce a channel. For example, you might have the highs are one channel line, then the midpoint is the middle line, and then the lows of price would be your lower channel. There's all different ways to do a channel. You also have momentum, and oscillators typically will classify as oscillators oscillators will typically identify as momentum indicators as well, and they just really measure how fast is price rising or falling. Okay, now this is the first one that Nadex offers in their charting platform. It's called the Aroon. Now notice that after the indicator name, I have classified these as either a hard indicator to understand and use or easy. Now I did that because, you know, different traders have different levels. You might be a new trader or you may have been trading for years, okay? So if you're a brand new trader, I would look more towards the ones I have identified as easy. If you're an experienced trader, you might be looking to find an indicator that's going to help you time your entry or time an exit or just to incorporate into your trading plan. So you might want to look at the harder indicators. And again, they are marked right here as either hard or easy, okay? So the Aroon indicator measures the time it takes for price to reach the highest and lowest points over a given time frame as a percentage of total time. The green line is considered the Aroon up. The red line is considered the Aroon down. The higher the line, the stronger the trend. The lower the line, the weaker the trend. So this indicator would be classified as a non-directional indicator. What does that mean? It means that regardless of whether the market is going up or down, if you want to see strength, you want the line to be going up. Does everyone understand that? So in this case, you can see the blue box is telling you that this is a strong trend because the blue box is very high. It's telling you that the downtrend is pretty much non-existent because the Aroon indicator is below 30, okay? You might use this to say, okay, this is a strong uptrend, you know, I can actually enter on a pullback, for example, okay? Then you would have to classify your pullback. Now, this is the average true range, and I love the average true range. It's a very easy indicator. A lot of indicators have the average true range built into it, okay? And what it does is it plots the moving average of the largest difference between high and low, the current high, excuse me, less the previous high, or the current low less the previous close. So for example, in this one, you can see that the highest point was 108.44. The lowest was 108.11. The difference, which is the average true range, is 33. Now this would be pips because it's on a yen pair. Does everybody understand that one? Now, how do I use that? Well, for example, I like trading 5-minute binary options, okay? But in order to trade a 5-minute binary option, I want the average true range to be greater than 3 times the strike width of a 5-minute binary option. Okay, because that tells me, hey, there's enough volatility here, I can trade out of the money binary options. Does everybody understand that? It's a very simple way to say, hey, I want to trade this market right now. Now, you also have the awesome indicator. It's pretty easy, okay? It consists of red and green histogram bars, and it's really just a simple moving average based on the midpoints, okay? Now, a green bar tells you that the value is greater than the previous value. A red bar tells you the value is less than the previous value. A bullish cross tells you that the value flips above zero with green bars. The bearish cross tells you the values flip below zero with red bars, okay? This is probably not one of my favorites because I use candlesticks. And if you notice, the green candlesticks are always going to be green down here, okay? It's pretty simplistic. Now, could you use this and say, okay, if it crosses above, I want to look for long positions? Sure, okay. Or if it closes below zero, I want to look for short positions, okay. And then you would combine that with your candlestick formations, okay. Now, Bollinger Bands is very simple to use. It's based on standard deviations in a simple moving average. So, for example, in the center here, the black line is the 20-period moving average, okay? And then this is -2 standard deviations from it, and this is 2 standard deviations above it, okay? So the theory here is that anytime price moves away from the median, okay, if it goes to one of these extremes, then it's going to come back to your center line, okay? Now, this is also used to identify trend. So if your Bollinger Bands are going downward, that's telling you you have a downtrend. If the Bollinger Bands are going up, then you would have an uptrend. You know, a very simple technique is to allow it to pull back to the center line, which is your 20-period moving average, and then enter in the direction of the trend. In this case, you would be entering in the direction of the downtrend. Does everybody understand that one? There's also a technique where the Bollinger Bands move sideways, okay? In that case, you know, that's probably not a good time to do out of the money binary options, okay? Why? Because you're moving sideways, okay? Now, you may want to say, okay, if it's at the top of the Bollinger Band, you can trade it back to the lower band. Or if it's at the lower band, trade it up to the upper band, okay? But just be aware that if it's moving sideways like it was over here, then that's when you do not want to, take a short-term binary option, okay? Then we have the Chaikin Volatility. This is considered a more advanced indicator, which I would classify as a harder indicator to learn. It does identify the volatility based on high minus low in the difference between two moving averages of a volume-weighted accumulation distribution line, which is basically the buying and selling, okay? The Chaikin, if it's below zero, is considered an entry area. The Chaikin above 100 is an exit area. Let's see, VJ, what would be the ideal settings for Bollinger Bands? Default is 22. VJ, I always start with the basics, okay? And the reason is I don't believe there's any ideal setting on anything. I think it's more dependent on the time frame that you're trading and potentially, which option you're trading. So I would start out with the default and then say, okay, I want to trade a little bit faster. Look at the chart and see if you want to change it. Okay. Now, back to the Chaikin. If this is below zero, like it was here, here, or here, okay, then if you were in the trade, you would potentially want to exit, or you could also use that to say, okay, this is in an uptrend. It just made a low below the Chaikin volatility. So this is where I potentially want to enter a long position. Again, you would be going with the trend, using that to identify the potential pullbacks. Does everybody understand that? Any questions on the Chaikin? It is a harder indicator to use. So let's say you're a beginning trader. I would not begin with this one. Okay. Now, there's also one that's called the CCI. It was developed by Woody, and most people actually refer to it as Woody's CCI. And it's actually a pretty easy indicator to use. It's either, it identifies the market as being either overbought or oversold. So in this case here, you see that it's red and it's oversold. Well, this is an area potentially where you would enter a long position. Or, for example, over here, you can see that it's registering green, which is overbought. So you could potentially say, okay, I'm going to do a sell position there. Now, I do encourage you to still trade with the trend, especially if you're a new trader. Counter trend trading is something I believe should only be done after you have more experience in the markets. If you're new, just use it to potentially identify a area that a retracement or a pullback has occurred, and then just go with the trend. Now you also have the Detrended price oscillator, and I do consider this very hard. It's used to identify cycles because it measures the difference between the historical price and the moving average, okay? Now, it is actually considered to be overbought or oversold, okay, if it is below the lines, okay? So you can see here you've got all red, and down here would be considered as oversold, okay? This is not one of my favorite indicators. I think you can do the same thing using a moving average, but again, you can measure the cycle or the length of time that it takes to make from one low to the next low, okay? I don't do a lot of cycles, so cyclic oscillators are really not my forte. Now, you also have the directional movement, and it is pretty hard. This one took me quite a long time to understand, but it actually identifies trend trading opportunities, okay? It will identify when the trend is strong and when the trend is weak. And it is also non-directional, okay? That's also what makes it hard for new traders. Now, it is moving averages based on range expansion, which means it's going to use a version of the ATR in it. It was developed by the same person that developed the ATR. The red line here identifies the DMI negative. The green line identifies the DMI positive, and the black line identifies the ADX itself. That is what tells you whether the trend is strong or weak. Dave, yes, it is being recorded, and it will be available later. Now, there's three components to this, okay? There's the red DMI, there's the green DMI, and then there's the black ADX line. The green and the red actually show you the trend, okay? So in this case, the green is below the red, so that tells you that the downtrend is dominant, not the uptrend, okay? But then you have to look at the ADX to see whether this is a strong trend or if the trend is weakening. And you can see on this one that actually the trend started weakening right here, okay? And at this point, the DMI positive briefly closed above it, but then the red took back over, okay? And that is a pattern that is tradable, but again, this is one that's harder to learn, and it would take some time working with it to actually learn it, okay? It is not one to start off with if you are new to trading. Okay, then you have the Donchian Channel. It's very easy, and it's really a channel that's based on the highest high and the lowest low. Okay, and again, you do have your midpoint here. And, you know, if you are seeing that the low channel is making lower lows, that's easily identifiable that this is in a downtrend. Whereas if the high line is making new highs, more than likely you're in an uptrend. Okay, what would an entry be? Well, your potential entry could be when it retraces back to the middle line and forms a candlestick reversal pattern. Everybody understand that one? Any questions on the Donchian channel? Okay, let's go on to the next one then. And the next one is really simple. It's an exponential moving average. And it's a moving average that gives more weight and importance to current prices versus historical prices. Okay, so in this case, the prices over here on the right side of the chart, which we consider the live edge of the market, is going to be giving more weight than the ones over here on the left side, which is considered the historical prices. Okay, now in this one I've got 3 exponential moving averages on the chart. The gold one is the 100 period moving average, also considered the slow moving average. The 50 is a medium term, and the EMA 20 is your fastest moving average. Okay, so a very simplistic entry is say, okay, all 3 of my moving averages are in the same direction. Okay, in this case, they're all moving down. Okay, price goes back to the moving average and it forms a reversal bar. The entry could have been here or it could have been here. Okay, it could even come up to the second moving average and give you another entry. Okay, there are all kinds of ways to use exponential moving average. And if you notice, most of the indicators that I have talked about so far actually use moving averages. That tells you it's a really, really good indicator to start with. Okay, any questions on the moving averages? Sometimes the simplest indicators can really be awesome. Okay, let's go to the next one. Now this one, the Ichimoku, and if I did not pronounce that wrong, I am sorry, but I've always had trouble with that one. And I consider this one a very hard indicator to learn. The reason is it has a lot of information within this one indicator, okay? You have a conversion line, which is this light blue line right here, and it is an average high and low over a period of 9 bars. So that is a form of a moving average, okay? Then you have a baseline, which is the average of the high and low over a period of 26 bars. Then you have the lagging span, which is your brown line right here. And that is the close of the past 26 bars, okay? Then you have the leading span A. It's a conversion line plus a baseline divided by 2. So really what you're doing is you're taking these 2 moving averages and dividing them by 2. Okay, then you have a leading span B, which is the magenta line. Okay, and on that one, you're taking the 52 period high plus the 52 period low and dividing by 2. The cloud, which is this area right here, okay, is defined by saying span A is greater than span B and rising, okay, it will be blue. Okay, it will be red if span A is less than span B in decreasing. Okay. Now, in this case, let's say right here, and let me mark this on the chart. Okay, right here you turn to red. Okay, again, using simplistic entries. Okay, you could have had an entry here when it pulled back to this blue line. Okay, why? Because really this is very reminiscent of the moving average retracement. Okay, again, you're red here, and then you get candlestick formation here and here. Again, this could be another entry point. Does everybody understand that? I think one of the reasons I don't tend to trade this one is because you can pretty much do the same thing with moving averages. You know, if you put two moving averages on there, you're pretty much going to get the same result, other than your spans. Okay, but you could actually do that as well, just by coding this into a moving average. Okay, to me, sometimes the busier your chart is, sometimes you miss out on the opportunities. And this one to me is just real busy. Does everybody understand that? Now, that doesn't mean it's not good. There's a lot of people that trade this. You know, and this comes into a trader's personality, okay? And, you know, if my chart's busy, I have ADD, so it's very easy to get me off track. And this one will tend to take me off track just because it's so busy. Again, you have to look at you as a trader and what works for you, okay? Now, you also have the KDJ, which is an oscillator. It is a harder oscillator to trade, okay? It is derived from the stochastics, but what the oscillator does is it adds a %J, which is a divergence of the D percent in the K percent, which is in the basic stochastics. And again, you would use this to, for example, identify divergences or to identify the overbought and oversold areas, okay? The %K is your black line, the %D is your red line, and then the %J would be the divergence of the D in the K, okay? Now, you also have a Keltner channel, and this is a moving average band with ATR. Again, there's a lot of indicators that use that ATR within them, okay? Your standard entries on a Keltner channel is you sell when price closes below the lower band, or you buy when price closes above the upper band. You can also even do it like here. You had a nice retracement, but the bands are still going down. When you get that candlestick reversal pattern, then you could always enter. So you had an entry here, and then you had an entry here. Any questions on the Keltner? It's very easy to use if you're a beginner. Again, really simplistic. All right, let's move to the next one. Oh, that's it. That's A to K, okay? Now, this is the important thing about finding an indicator. It's about what works for you, okay? It's about what you understand. Now, again, if you're starting out as a brand new trader, choose one of the simple ones. Choose from different categories. A great example would be maybe moving averages with, say, a stochastics or something that identifies overbought and oversold. We'll go through some of the stochastics next week, or some of the other oscillators like the RSI and the stochastics. But start out with those because they're very simple. They're very specific, okay? You can say, okay, price is doing XYZ, and this one is confirming it, so I have an entry, okay? And then if you want to add another indicator, choose one from a different category, okay? Maybe you want a channel, maybe you want one that's support and resistance. You know, choose from different varieties so you're just not duplicating it. But let's say that you wanted to do the moving averages with a Keltner Channel, okay? That's probably not the best category, okay? Because they're really related in that aspect. Instead, choose one like from Oscillator, one from support and resistance, and one from trend. Does everybody understand that? Don't just choose from the same group. Can I talk about the pros and cons of using the Nadex chart versus more advanced charting software like NinjaTrader? Sure. NinjaTrader is going to plot the underlying instrument. Does everybody understand what I mean by underlying instrument? Okay. All right. Nadex is going to plot the binary option prices. Does everybody understand that? And let me open up one. I'm going to use TradingView to show you because I think TradingView and the Nadex chart will show you what I'm talking about. And I'll open up two browsers so you can see it both at the same time. Give me just a minute and let me open it up, okay? The one thing that I have noticed, and you'll see it when I open up the chart, is that there's going to be a difference primarily in your candlestick patterns, which is also why I tend to use something like TradingView for that reason. And let me get a chart up for you. Okay, so here we have TradingView, okay, and this is the NASDAQ, and I'm going to bring this down to a 3-minute chart just because I want to show it to you. And I think you see it better when I do a 3-minute chart. Now I'm going to, in the Nadex platform, I'm going to bring up the same one. And let's go to indices, US Tech. We'll go to this one, bring up any chart. And we're going to change this over to a 3-minute. Now, in this case, you're not seeing a lot of difference between this one and this one, okay? There's just not a lot of difference. And the reason is because this one is following this one, okay? But you will occasionally see differences. And I'll show you one right now. And this matters to me because I am a big trader of what? Candlesticks. So do you see this candlestick right here versus this candlestick right here? Okay. This little bitty red one over here. Now, in this case, that may not make a difference to me, okay? But sometimes it will make a difference. Does it make it right or wrong? No, because they're still going to tell you the same thing, okay? But I want to see the actual candlestick on the underlying versus the binary. Do y'all understand that? Now, let's just go and let's add a simple moving average on both charts, okay? So I'm going to add an exponential moving average over here. And this one is going to have it as I believe it's a different name for it over here. There we go. Over here it's called the moving average exponential, okay? And over on the Nadex platform, it's going to be called, I believe it's the EMA, exponential moving average, okay? Now this one is automatically going to set it to 20, 50, and 100. Over here, I'm going to actually have to put in 3 and set it to the same. So I'm going to put a 20 in there, and then I'm going to put another one that's going to be at 50. And I need to change the color so I'll know that this is my 50. So we're going to put it at red. And then I'm going to insert one more. And we're going to put it at 100. Okay. And we'll set this at 100. I want to change the color again because this one is going to be the slow moving average, what I consider the slow. We'll make it purple. Okay, so now do you see how they're giving you really the same values here? Okay, it was just easier to me to insert all 3 over on the Nadex versus the trading view. I've done a whole slew of webinars on candlesticks, Dave. They're actually available through the Nadex webinar archive. I can't talk today, evidently. Now, if you notice, these moving averages are really giving you the same values as they're giving you over here. The only difference is this is plotting the binary option indicative price. This one is plotting the actual underlying instrument price. Does everybody understand that? So watch this number right here versus this number right here. Usually they're pretty much on point with each other. But it can make a difference in your candlestick patterns. That's the only thing I've ever noticed a potential difference in. Any questions on that? Is one better than the other? Not really. I mean, if you're a beginning trader, you want to limit your expense, then you trade on the Nadex chart. When you want to enhance your trading, well, you might want to do TradingView or TradeStation or NinjaTrader or multi-charts. There's overabundance of them. Now, I tend to like TradingView a little bit better just because I can bring it up anywhere on my iPad. And the others you can't do that with. But again, they all do the same thing. And you can see here, they're all doing the same thing. Let's go and add another indicator that's a little bit more complex. Okay. Dave, you wanted the webinar on the candlesticks. Let me copy that link up for you. Let's see. There you go, Dave. Okay, let's go and add another indicator in here. And, well, let me do it over here first, and then I'll select one of those. Let's just do Bollinger Bands. Okay, so you have Bollinger Bands over here. We're going to put Bollinger Bands over here. And let's get rid of all of my little drawings. I'm not a great artist, that's for sure. And did you see how the Bollinger Bands really, even these little bitty moves right here are duplicated over here? Okay, you're not going to see a big difference here. Okay, so again, if you want to watch your expenses, okay, then, you know, you go ahead and you start out with the Nadex version, okay? You can get more complicated, but if you are a beginner, don't start out complicated. Start out simplistic, okay? Any other questions on that? The charting platforms, usually they're more advanced than what the Nadex is. They have more indicators. That's what I mean by advanced. But having more indicators does not make you more successful, and you need to understand that too. I mean, I've seen traders that had so many indicators on the chart that they couldn't trade. It's called analysis paralysis, okay? So, and sometimes you can hamper your progress as a trader by going to a different platform like TradingView because you're not ready for it, okay? You do have to be ready. It's like you're trying to run before you know how to walk. It's almost impossible to do that. All right. Okay. So let's go back to the presentation. I got sidetracked there for a minute, guys. Sorry about that. Okay. So let's say, and again, I'm using a moving average example because a moving average is one of the simplest indicators you can start with. Okay. In this case, you have both the fast and the medium moving average below the slow moving average. So if you're not sure which one is which, just look right down here. You have a 20-period moving average, 50-period moving average, 100-period moving average. The 100 is the highest number. That's considered your slow. The 50, that's in between 20 and 100, so that's medium. And then you have a 20-period, which is less than 50 and 100, which makes that your fast-moving average, okay? Very simple. Create a trading plan with this. Price is trading below a moving averages, all the moving averages. Price returns to the moving averages, either the fast or the medium, forms a bearish bar. You enter using a 2-hour binary with risk less than X. Why did I put X there? Because every trader in this room has a different risk level. Some of you are going to want to trade in the money. Some are going to want to trade deep in the money. Some of you are going to want to trade at the money. Some of you are going to want to trade out of the money, okay? Just put it in your trading plan, okay? You could have even incorporated the ATR onto this and said, okay, the ATR has to be greater than 3 times the strike width for a 2-hour chart, okay? So the strike width on the USD JPY is 4 pips. That means my ATR would have to be greater than 12 pips for me to take an out of the money binary option. Okay? That's using 2 free indicators, very simple indicators, but I can define a trading plan around that. Does everybody understand? And then practice your discipline in trading it. Okay? Have some losses. Be grateful for the losses that you have in demo. because it's teaching you something. It's teaching you about trading. Any other questions today, guys? Okay, if y'all have any questions, you can always email me at gm@tradershelpdesk.com. You can also visit my website at tradershelpdesk.com. I do have a lot of courses on trading binaries as well as trading the markets in general. Okay, and I'm always available. If you have a question, just reach out and I'll be happy to answer you. All right, thank you for joining me today. And I hope you have a wonderful week. And I'll see you next week in part 2.